In just 4 weeks, Bitcoin moved 20%, but using a specific ETF strategy, the same move could have netted you over 100%. In this video, I'll show you exactly how to spot these opportunities before they happen using regular ETFs anyone can trade. And the best part is that this strategy works across commodities like gold, copper, the stock market, crypto, and more, all following the same simple pattern. Now I know what you're thinking. ETFs are supposed to be boring, slow-moving investments. But the fact is that most people are using them completely wrong. They just buy and hold, missing out on the biggest moves in the market. For the last half of a decade, I've been perfecting a simple 3-step ETF trading strategy that works across multiple markets. Not by taking huge risks, but by carefully watching specific signals in the primary market. And here is what makes this strategy different from others. You don't have to monitor the markets all day. It works whether you are a passive investor and you hold for several months and weeks, or you're an active trader. And most importantly, you'll know exactly when to enter for maximum returns. In this video, we'll go through the real examples from Bitcoin, gold, copper, and the stock market. And I'll be showing you step by step how we spotted these opportunities. Before we dive in, grab my free investing guide from the link in the description. You'll get my investor patterns playbook that helped our members catch this SMCI's 240% move. And you'll also get my swing traders gap up strategy that helped members make 60% on HIMS in just 2 weeks. Just sign up for the newsletter and you'll get instant access. It's a very simple 3-step formula. The fact is that the stock market is simple, but a lot of people complicate it. Step 1 is to just watch the primary market. Then you want to wait for a great signal in the primary market. And then after the primary market has shown you a great signal, then you want to be buying the ETFs, leveraged ETFs, or the best stock or commodity in the primary market. Now, if you're confused, this is going to be very simplified in the next slides. But our most important goal that I can't keep stressing is that we just want to keep watching the primary market. Primary market is just normally something which represents a basket of stocks, like stock indices, could be commodities, it could be Forex, it could be sector or industry ETFs. So I mostly use stock indices, commodities, and sector and industry ETFs. We always just want to watch the primary market, and then when we see a strong signal, then we shall look into the market. But before we go into the video, we have to understand that leveraged ETFs don't work the way people think they do. A lot of people think that a ×2 ETF will give you ×2 of the return, but that's not the case. A ×2 ETF actually just promises you ×2 of the return for just 1 day in the market, but not for an extended period of time. So what does this mean? That if the primary market like Bitcoin goes up for 10% in 4 days in a row, the result will be 1.1 power 4. So you get a 46% gain on the primary market. If you have $100, that's $146. But if you have a ×2 ETF, what is going to happen is that you're going to get 20% over 4 days, and that's why it gets really interesting. Because we only get a promise of the daily move. So we're going to move 20% per day. So we are going to be getting 1.2 power 4, which is a 107% gain. So that's not 46 × 2, which is what most people would have thought. The movement in either direction is very fast compared to the primary market. Now that might sound very good, but the problem is that now when we go onto the bearish side, when the primary market is correcting, then also the leveraged ETFs correct very fast. If the primary market is going down 10% for 10 days in a row, you're going to be ending up with a 34% loss in total. But for a leveraged ETF, you're going to go down 20% daily and you'll make a 60% loss, and that's a very huge loss. So if you're using leveraged ETFs, you always want to be very, very safe. And I'm going to show you how to do that in the video. And of course, this video is not just about leveraged ETFs. There are other strategies that I'm going to show you. So what are the strong signals that we can look for on the primary market? If you're an investor, you want multi-month breakouts. These are the best for both traders and long-term investors. This is just the dream. Once you catch this one, just know you're going to make a lot of money. We want to see multi-month breakouts. Then for swing traders, we can get 3 to 4 week pullbacks on the primary market. And then once we find that, then we can go and then look for good setups in the constituents. A lot of theory confuses a lot of people. So let's go deep into the examples to really understand what I mean. Here we see the primary market of Bitcoin. We see 2 big bases. We see this first multi-month base, which went up 137%. And then we have a second multi-month base, which only after that, currently, it has just gone up 54%. After you find that primary market, then now you start to look deeper into the primary market. What can you do to make more money from Bitcoin? You can either buy a ×1 ETF, buy Bitcoin itself, or buy something that is leveraged from Bitcoin. And it's always very safe to actually buy on these big breakouts and get into the leveraged ETF. Let's see what happened. Remember that the primary market for the first base moved up a maximum move of 137%. If you instead got a ×2 Bitcoin ETF, then you'd have made 400%. That is not ×2. That is almost ×4 of what you could have gotten. Because if you put $1,000 into Bitcoin here on the breakout, you could have gotten about $1,300 profit. But if you put it in here, you're going to make a $4,000 profit. That's how big it was. So if you make 10,000 here, you're going to make 40,000 here. But that only works on these really big breakouts. And I wanted to show you here on the correction that there was a 40% correction in the leverage ETF compared to here, which was the 10% or 17% correction. So those are very scary moves, which a lot of people might not have been able to hold from. And then we see here on this second breakout, the leverage ETF does 144%, but the Bitcoin itself only did about 54% maximum, so almost a ×3 return. So the longer it moves, the bigger the move in the primary market, the bigger the move in the leveraged ETF. Another trick is to buy one of the best stocks which are holding Bitcoin. MicroStrategy is a stock that holds a lot of Bitcoin. So during the time when Bitcoin was doing 137% move, this one actually did 400%. And here, remember, the primary market Bitcoin did 54% move. MicroStrategy did a 200% move. This is also one of the other tricks. So you want to be finding either the best stock or the best ETF. Now, of course, if you don't know, please sign up for the newsletter. I do all of this work for you and I just let you know. But I just wanted to show you the whole system so that you can be able to do it for yourself. We also see Coinbase went up 230% the first time, but Bitcoin, remember, only went up 130%. This is a crypto stock. Then the second time it did a 58% versus a 54% move in the primary market. So this is quite very interesting. Now, of course, this is not the only thing you should know. There's some other technical patterns that we could have seen here, right? So for example, in the primary market, we know that after this first base, we can only trust the first two bases. So we can only trust this first base and then the consolidation after that. And after that move, we know that it's most likely not likely to continue from there. So we would have known to get out around maybe 100%. So there are a lot of other technical lessons that you should know, to profit from it, but I'm just trying to show you the higher level of how you can find these really big winners. A good example last year was copper stocks. So copper also moved very small percentage, but we are going to see what happened to copper stocks. So here we see copper did a 33% move. We see a very nice cap and handle in the primary market. So I'm doing this mostly for investors, but of course, if you're a swing trader, just know all of these weeks where you see these weekly swings up and down, you could have profited from this, because once the primary market corrects for like 3 to 4 weeks, you can look for opportunities to swing trade in those markets. But I'm just trying to show on the larger time frame so that everybody, like investors and swing traders, can profit. So let's see what happens after that. So you see that copper, which is a commodity which we keep watching, it has formed a very nice cap and handle, broken out on volume, does a 33% move. Let's see what happened to the stocks. HBM, which was a copper stock, we can see that the chart is actually very similar to the copper chart. This is where it gets really beautiful, right? So look at the chart. It's pretty much almost the same as the copper chart. It comes here from that same cap and handle and breaks out on huge volume. So I color code my bars. Whenever you see this dark green bar, that means that was a bullish week with a lot of volume. So we see a very nice bullish breakout, and this one does a 90% move. So of course, as investors or long-term traders, we're not going to get a 90% move. We're most likely going to get maybe 70% of it, but that's still a very good profit considering we might have only risked 5%, because here we see a multi-month breakout. We know we're going to hold for some time. This one didn't form the second best as I would have hoped, but you're still going to get a very nice profit. Then the second stock, which was a copper stock, also had a very nice pattern. So you see here, comes from the very nice cap and handle, some tight weekly action, breaks out on volume. There's a 100% move, 110% move, compared to copper's only 30% move. So you see what we're doing. What's the primary market? Once it sets up, we see, okay, which copper stocks do we know? Go deep, look for copper stocks, and then you could have gotten these very huge returns. Gold stocks example. So this one is mostly for swing traders, because I did this last year, and I hope you can see how you can profit from this. So those examples before, you could have swing traded them, but I was showing a lot of what an investor can do. So let's see what a swing trader could have done. So here we see we have our primary market, right? So we always need to know our primary market is gold. So we just watch gold itself. And then from gold, we know that we have some gold ETFs. So there's GDXU, we have some gold stocks, we have EGO, NGD, AU, others. Where can you find these stocks? You can find them on finviz.com. If you want to know how to find sectors on Finviz, you can just go to groups here. You come to finviz.com, you go to groups. Let's see which group. Consumer cyclical, you can look for, it can either be a sector or an industry. Let's say industry, right? So let's say uranium. So we go to uranium. So here we can see all the uranium stocks. So you come to finviz.com, click screener, and then you can see uranium stocks. You can also click charts just to show you like maybe just a longer time frame chart. So this is how you do it. I don't really do it like this. I use TC2000, but this is the free version that anybody can use. So maybe you want tracking stocks. Tracking is going up. Let's say silver is going up. So you can look for silver stocks. Maybe restaurants are going up. You look for restaurant stocks. So this is how you can know which stocks are going to be happening. Okay, here I show you some weekly pullbacks that were happening for a swing trader, for example. So here we know that for a swing trader, we always just want to see maybe a 3 to 4 weekly pullback. We're looking for a cheat or a cup and handle so that we can swing trade. So let's see how we could have done that. So we see here, we have this first pullback. We could have gotten this first trade. It was a 5-to-1 win trade. You get that profit. Then we see this other 4-week pullback. We have a trade here, this. Then we have this other 3-week pullback, should I say. We have a trade and trade 4 there. This is in the ETF. But of course, you don't want to trade the ETF. You want to actually just go into the ETF and look which stocks are strongest in the ETF. Because the ETF is a basket of stocks. And normally a basket is normally not the best thing. You want to find the best egg in the basket. So for example, during all of those times, right, in where gold was moving, we find EGO stock had all of these 4 trades that you could have swung trade. Trade 1, you win 4-to-1. Trade 2, 3-to-4, you win. So we see the same pullbacks. The chart is very similar to GDXU, right? NGD, we see the same thing, right? We see all of these trades. So here I share an example. So for each of these trades, if you had risked $1,000 on each, you could have made a profit of $9,000, right? Of course, trade 4 was a loss, but you still ended up with a very huge profit. So this is how you do it as a swing trader. We wait for a pullback. On the week, we like to see 3 to 4 weeks at least. I like to see at least 4 weeks. That's the best. Sometimes I'll do the 3-week ones if the primary market has shown a signal, but it's still not the best trade. So we see trade 1, trade 2, trade 3 in the weekly chart. We come on a daily chart. The first time we see a cheat, jumps over that cheat, we buy, we put our stop down here, we make that quick profit. Here we see a checkout. You can see that quick checkout there. Forms a small cheat, we buy above the cheat, we get our breakout. Here it forms, consolidates, This was not the best actually, but the reason I just did this trade 3 was because a lot of the other stocks were confirming. So sometimes a lot of the stocks are confirming that they're going up. So this technical pattern was not quite right, but still, you come in here, forms a cheat, breaks out, make your 4-hour profit. So I showed you you could have made a maximum of 9,000. But of course, let's say you didn't make the 9,000. Let's say you only made about 5,000, but still, that was still gonna be great. This one was one of my favorites last year, Argentina stocks example. We see Argentina ETF, because I'm always watching either the ETFs or the commodity, because Argentina stocks. And of course, I don't care about Argentina as a country, but hey, I'm seeing the ETF is showing something very nice. It is showing a checkout. And we know that a checkout means that institutional investors have pushed the stock price down to get it for themselves. And the ETF is a basket of stocks. So this is happening in a bunch of stocks. That's why it's a very good signal. We see a checkout here. We see something, it forms like a cup and a handle, and it goes up 40%. And someone who bought the ETF made a 40% return because this was a very good signal. And hey, we congratulate him. But that is an amateur. If you want to be a professional to make a lot of money, we see that Argentina ETF has, shown a very strong signal. What can we do? We go online and we just put in the ETF. We just put in Argentina ETF. And we know it's showing Argentina stocks. So you just come here and you look at holdings. And it shows you which stocks it is holding. And this is why you can start seeing how to make these really big moves. So you can see these are very good signs. So it shows you these are the holdings. So we want to find the best of these holdings. Of course, don't get the bad ones. Now to find the best holding, to know which is the best holding, that's also another lesson. So just sign up to the newsletter. There are resources where I teach you all of these things. Or you can come here and then you can find, let's say we type in YPF as one of the stocks. Come in Finviz. It's an Argentina stock. So you come here and you see the list of all Argentina stocks. And if we go to the charts, let's see, we see a weekly chart. You can see that the patterns are very similar for all of them. They all went up, but we could have seen it from the ETF. Okay, so 40% return, we say boring. We want better. If you did BMA stock, you can see it has a very similar pattern. Does this huge flash out. So it does a cap and a handle. For it has currently moved up 120%. I recommended it to the premium subscribers, for the newsletter. So you can always get that service. You don't have to do all of this hard work. But I'm just trying to show you what I actually do for you. SUPV stock. These are all Argentina stocks. You can see the patterns are all the same as the ETF. So this is not magic. This is very easy. Comes down. This one also comes down. Very same pattern from the cap and handle here. We see this chit on the weekly chart. Very tight price. Breaks out again. 119%. And the reason why this was a very long hold is that this is a multi-month breakout. So you see this, it has been consolidating for a very long time. So if something has been consolidating for months, you just know that, hey, when it breaks out, it's going to be beautiful, right? We see here, this multi-month breakout, a very nice cap and a handle here. You can see this cap and a handle. It has taken over 3 to 4 months. There's the multi-month breakouts I'm talking about. That's a 185% move. And this is not from the bottom. This is from the buy point. So you could have tripled your money with this one. So you put in $10,000. You wake up 3 months later, your $10,000 has turned into $30,000. This is how you grow your money, by finding these moves. And they don't happen very often, but when they do, they're sweet. YPF, cap and handle. You could even have bought here on this huge flash out because we saw it on the ETF. You see they're all showing the same signal. So once you see these things, you can't get scared, man. You just dive in there. YPF from this cap and handle does a 129%, right? GAL stock, very nice. Cap and handle, easy, 116%. So at least each of the good stocks moved at least 100%, right? While the ETF did 40%. So this is how you make the big bucks, guys. China stocks, another example. Follow the primary market. I guess at this point, I'm tired of saying it. So of course, the primary market is a HSI index. Here we can see several buy points for a swing trader. Of course, for an investor, you want to look at the weekly chart. That's when you get in. Make sure you have your stop losses right. You know when to sell and everything. Okay, let's go and see what happened on those 4 buy points. So we see here JD stock from this very nice, we can see it pulls back, jumps out over the 20 EMA on volume. So this is a very nice swing trade. 4-to-1. If you risk $100, you get your 400. How long does it take? Just about 3 weeks. I don't even know, maybe 2 weeks. We can see the bars are very little, right? Of course, this looked like a very good investment, but if you're an investor here, actually, you're not going to make that huge of a return because China stocks are just too volatile. FTSE stock, we see 2 trading opportunities. Another very good signal, especially for stock indices, that whenever a stock index is bouncing off the 20 EMA, that's a good time to look into the individual stocks to see what signal they are setting up. The HSI index was actually bouncing off the 20 EMA. That's how I knew how you could have gotten in here. We see a small chip. It's above the 20 EMA. You know where to put our stop, just where the structure breaks, and then 5-to-1 trade. Here, the index was bouncing off the 20 EMA again. Like I was showing you here, these are the bouncing points I was talking about that we're looking for. And there's also a checkout and point number for where it bounces and then goes back down, goes back up. Here, we see a gap up in the morning. Of course, we know that this gap up means there's accumulation. We know where to put our stop. We don't want the gap to fill. 7-to-1 trade. This one, of course, FTSE was a little bit a complex move. I don't think I would have recommended it, but I was just trying to show you what it could have done. But there are some really simpler moves like TCOM stock. Now, this one was really nice, This one was, should I say, very easy to trade. The index kind of pulling back there. We know TCOM stock is a China stock. Come in here, correct. From this kind of mini chit, stays above, bounces again. You just get in there. 5-to-1 trade, win. Then here we see tight price action, gaps up. That was, I think it might have been the same day FTSE gapped up as well. Yeah, I don't know if it is. But yeah, gaps up, after this tight price action, you could have gotten a 4-to-1 trade. Of course, as an investor, you just buy here around $36. That's what you could have done. Then you would have sold around 50, right? So you aren't going to suffer through all of these weird swing trades. But I'll just try and show you what a swing trader can do, what an investor can do. And that is how you can make a lot of money from ETFs. So just look at the primary market. Is there a leverage ETF? But leverage ETFs are only good when there is a multi-month breakout. Great. But if it's just a normal 4 to 5 week breakout, just look for the best stock. When there's a multi-month breakout, can you find a leverage ETF? This might be one of the best options, right? Second, can you find the best stock in that industry? You can pile your money into that stock and you can make money. Of course, you have to understand technical patterns and all of that stuff that I teach on this channel, and also in the newsletter, there is a resources page where you can find all of these tools. I hope you found this valuable. I'll leave this on the resources page for the newsletter. and may the markets be with you.